LiteFinance, the world of financial freedom.
Hello guys, it's Monday, July 18th. Let's start with the market forecast. And so this week we have a couple interesting publications with the ECB inflation data and rate hike in the main focus. But of course, we will begin with the macro calendar. So today, as usual, a slow start. We already received the CPI data from New Zealand, which are higher than previous month, but next publications are starting on Tuesday. So we have an average earnings and claim account change from the UK Eurozone inflation data and later speech from Bank of England, Mr. Bailey. On Wednesday, we will get inflation data from the UK and Canada and later crude oil inventories. On Thursday, we will get interest rate decision from Japan and the ECB. And while the first one shouldn't be changed and there are no significant signals of changing the policy in Japan, the ECB announced that they will most likely raise the rates by 25 basis points. Just a slight change since they are worried very much of a recession in Europe. We can see worsening conditions in Germany, inflation is still persisting high, and so they do not want to add costs for companies. 30 minutes after data publications, the press conference will start where we will get more information about the future approach for interest rates from ECB. Then on Friday, we'll get a PMI data publications from manufacturing and services from the biggest economies like UK, Germany, Eurozone and US. And besides that, numbers on retail sales from the UK and Canada. And overall, as for current situation, there is a huge risk of recession waiting in Europe since the Nord Stream 1 gas pipeline is switched off currently, and it is possible it will not come back to operate as scheduled by the end of the week. As you know, the LNG terminal in the US is still not operating, so the situation is getting tight, especially for Germany, for their manufacturing industry. And the risk is visible also in currency quotes. Euro-USD is traded nearly parity levels. PLN, Polish New Zloty, is weakening, which means capital is fleeing out of Europe to safe haven, which is the US dollar. If we talk about other things like inflation, we can clearly see that the raising interest rates policy is currently not working. Inflation is rising continuously despite multiple rate hikes in many countries. In the previous week, US inflation rose again. Fed Watch tool shows that the market is expecting that Fed will raise interest rates further. It was also announced by Jerome Powell in Sintra that they would rather try to degrade growth than let inflation run out of control. But it seems like they don't have control over it even right now. So it is an interesting situation developing constantly. As for US indices, we are discussing a couple of weeks ago how the midterm elections influence the markets and that most likely the second part of the year will be positive. So if someone is looking for a further downtrend on S&P 500 or Nasdaq, he might be disappointed. Next interesting thing is gold, which people are saying that it is a hedge against inflation, the same as Bitcoin. I would question this statement. It rather hedge against hyperinflation, if I would have to say something about that. If we check the charts of gold, for example, we see how these assets are performing poorly while inflation is still rising. This can mean two things. Either this correlation isn't working, or, as we know, prices are forecasting what will happen in the economy from 3 to 30 months, and this would mean that the market is pricing low inflation in future. So if you go to the BTC chart, we can see that it is still struggling with the 22k USD level. Many traders and analysts are predicting that BTC is forming some pattern after which we will break out to the upside. I wouldn't be so sure right now. It looks more like a flag after which we will fall further downward as it was in previous months. If we would be targeting higher levels, I would want to see BTC hovering above 23,000 USD level. If we manage to keep this one, then maybe the road to the upside is open. But for now, everything looks rather like a trap for further dumping. We have information about developing situations with the Celsius, BlockFi and other lenders which are announcing bankruptcies. So the situation is still not favorable for growth. And okay, I think that will be all for this episode. Thank you guys for watching and till next time.